Steve Schutt is with us with our mortgage insight of the week here at Mid-Bay News. Steve is joining us from a gas station in Alabama, so excuse any audio issues that we might have. But tell us a little bit about what you're hearing this week and what you want people to know about the market, especially in light of everything that we've seen this week.
Yeah, so I think the big thing that is on everybody's mind right now is affordability, right? That's something that we keep talking about, interest rates, insurance, whatnot. One thing that I keep noticing is that it seems like a seller's common response to affordability and getting their home sold is they just automatically drop the price of their home. And that's not necessarily the best thing for a buyer. I don't think the buyer even realizes it, but I'll give you a couple of quick examples. Let's say you've got a $500,000 home, okay? And that seller can't get it sold. So they decide they're going to drop it to $475,000, 25 grand. If the buyer is using a VA loan, they're financing the whole thing just to make things easy. That's going to save the buyer about $175 a month, okay? With that same 25 grand, if the seller were just to give it to the buyer and let the buyer use it for whatever they want, that buyer could actually save about $900 a month in that first year by using a special temporary buy-down program of their interest rate. And then it would stagger every year. And the payment would go from being a $900 savings in year one to a $600 savings in year two, $300 savings in year three, and you wouldn't even get to your full payment until year four. The idea is hopefully during that time you refinance to maybe a better lower rate or something of that nature. But that $25,000 that the seller is willing to take off the price of the home, if they give it to the buyer and the buyer's working with a lender who knows what they're doing, we could save them significantly more money than just reducing the price of the home.
So basically what you're saying is take that money, put it on a buy-down program so that you're basically waiting out the market so that interest rates will eventually get low enough to where when you refinance, you're saving that amount of money anyway.
That's correct. That would be the idea, is that you're able to get the rate down. A lot of our buyers are military home buyers, and they're only going to be here for a few years, 4 years anyways. So this just gives them an opportunity to buy a home and have a lower payment during that time period before they go to sell their home in 3 or 4 years anyways. It's just an opportunity that has more impact on a buyer than reducing the price does.
Right on. Well, that's a good tip, especially in this market where we're seeing sales slow down a little bit. Steve Schutt is your mortgage lender over at Movement Mortgage. You can check him out just by Googling his name. He's the top result. Or you can go to our website. We have plenty of information on him there. Steve, thank you so much for joining us, and have a good trip.
Thanks, brother. Appreciate you, man.